and welcome to this Friday edition of FreightWaves Now. I'm your host, Anthony Smith, and we have a full lineup for you today. Luke Falasca is back with us, and he's going to give us a broker update. Andrew Cox is here, and he's going to give us a DHL supply chain pricing power index update. But first, we're going to go to Zack Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Welcome to your Friday Carrier Update. I'm Zack Strickland. So today we're going to talk a lot about capacity because we talked about volumes yesterday. Obviously, they're still elevated, still pressing tender rejection rates higher as that demand continues to overperform last year by 25% or more in some instances. Traditionally, like we were talking about, July is a softer month. That is not the case this year. I've got our DAT long haul freight van index we use for freight futures here. It's the average long haul spot rate for a lot of the freight moving across the country. And you can see here in the green line, that continues to press higher even after the 4th of July. So we're looking at our outbound tender rejection index in blue, over 17.5% for the first time since way back in March there when we had that big shot of panic buying. So again, capacity tightening throughout the United States. Some of the stronger tightness, though, is happening in some of these larger markets. So let's go ahead and dive into what the rest of the country looks like right now. I've got our largest markets here on our volatility map showing not a lot of green in terms of outbound tender rejection volatility, except for that Joliet market. Joliet, again, this is going to be a statistically significant increase in tender rejection rate week over week. Strong increase showing up there in that light green. That means that's the strongest value or the strongest indicator that you could get in that light green. 2.38% increase. From under 10% last week, now we're up over 12% on the tender rejection rate. You can see it over there in the light green in the map. Now, some of the other areas of the country that we're watching for this increased tightness, statistically significant tightness, I should say. Out here in Northern California, again, normally a backhaul market, we're seeing tender rejection rates increase pretty rapidly out there. We noticed that along the border of Mexico, down there in Texas, things are starting to cool off a little bit. Not seeing as strong of an increase anymore. We're actually going back down from where we were this time last week. Down there around the Gulf Coast, however, just a little bit further east on I-10, Louisiana, Mobile, et cetera, showing some pretty decent increases on tender rejection rates. And then up into the Northeast, some of those markets around Buffalo, Syracuse, upstate New York, showing pretty decent increases as well. So again, any carriers operating in the spot market in any of these areas should see some significant increases in any of these markets you see in the light green for sure. Darker green, maybe just under the surface right now. So let's look at our weighted rejection index. Now, this is going to basically filter out where are my largest markets, so give me the biggest, most significant movements of the rejection rates in my largest markets, combining outbound tender market share and outbound tender rejection index weekly change to give me a highlighted area of where I have the highest odds of finding increased activity this week versus last week. So we don't see a lot of color on this map right now, and that's because some of the markets are really not moving, or the larger tender rejection rate movements are in some of the smaller markets. However, we've got Joliet over there. You can see on our list right here, Joliet is the number 4 weighted rejection index value of the day. And you can see it over there highlighted in that light blue. And then we have the Ontario market leading the way, along with Stockton up there in the Northern California area. So again, these are going to be the areas that you're going to want to offer. If you don't have a load coming out of those today, should have a little bit better chance, and again, accept more freight into these markets, because that's where you're going to see increased utilization due to increased spot market activity, and probably make a little bit extra money because of the volatility in these larger markets with these increased volumes coming out of them. So Ontario, Joliet, Stockton, Memphis over there in the middle of the country showing some increased activity as well. Let's break down Joliet and Ontario real quick on a high level. We've got the Joliet market. Again, this has been one of the softer large markets in the United States over the last little bit. You can see a sharp increase in tender rejection rate there in green for Joliet, jumping up over 12.1%. Here really rapidly and way higher than we were on July the 4th. Ontario actually took a little bit of a nap for a couple of weeks after the 4th of July, and now we're starting to see some significant increases. Volumes remain relatively flat during this time period. So again, capacity is the thing that's at risk without spiking volumes. So again, carriers having trouble out in these two markets. So stay tuned. Have a great
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning and welcome to another broker update. I'm Luke Falasca, and we're actually continuing to see dry van volumes surge. They've hit an all-time high for the year-to-date high, and you can see that right here. Actually, the blue line is year-to-date dry van volumes. So notice we had that first giant peak there in the panic buying surge in March, and then we had the run up to 4th of July, and then now we've actually surpassed that run up to July as well. So we are sitting there. There's a ton of dry van freight. Reefer volumes have moved up, but they are still a good ways off of their high where they were during the panic buying surge. Still quite elevated from where they were this time last year. But dry van is ultimately leading the surge, and tender rejections are really showing what effect this volume level is doing to capacity. We are sitting at, if you can see that green line there all the way here on the left, we're sitting at just under 19% tender rejections, which is absolutely astronomical. That is going to dry up, that's going to cause shippers to really have to dive into the spot market in a lot of cases, potentially have to rebid freight, just source capacity from different areas. It's a great opportunity to land new freight. It's also going to drive up spot market pricing as well. Now, what we're going to look at here is the dry van weekly tender rejection change. All right, markets in blue are where they're increasing. Markets in red are seeing contraction, and then the white markets are relatively unchanged. Slight uptick, slight downtick. So you can see here, Texas is softening a little bit. Now, that's not to say that Texas is soft by any means. It just means relative to where it was last week, it has cooled slightly, right? And that's not surprising. We saw a lot of run up going on there in Texas over the last couple of weeks. But here on the West Coast, minus Southern California, mostly Central California, all the way up through Portland, seeing a lot of blue there. Not really drastic blue, but a little bit of blue there. So we are seeing some tightening there on the East Coast. A couple of these mountain regions there in the north, like Idaho and Montana and North Dakota, not a lot happens up there, but if you do move freight up there, it is starting to tighten up a little bit. But down there, we're seeing Mississippi tighten up a little bit. A lot going on there in the Northeast, particularly New York, Maine, New Hampshire, Connecticut, some of those other areas, they are really tightening up. And then also there, a little bit in the center of the country around Rock Island, seeing some tightening as well. So remember, if you're moving any freight in these blue areas, you may need to increase your spot market rates. Also, make sure you are securing your capacity. Okay, call all your carriers, make sure your loads are covered, try to get them covered as quickly as you can. You will be paying a premium. And if you're not moving loads in the blue markets and you're trying to find places to target for sales today, focus on the blue markets. You should have really good opportunities from the shippers. Now, we're going to go ahead and focus on Ontario, California today because they are our new top dog in the market in terms of having the most outbound tender volume. They're the largest market share. They just surpassed Atlanta since Atlanta has fallen almost 7.5% in terms of outbound volume this week. So that's causing them to really increase a lot. You can see there that blue chart on the bottom right. The blue line's the outbound volume, remaining relatively steady this week, slight downtick. The orange line is the inbound volume. So, you know, there's a big drastic difference there between the outbound and inbound volume, and that's really what causes a lot of the tightening there on the West Coast. Now we're going to jump over here to Atlanta, which has slipped to the number 2 spot, which held the number 1 spot pretty much all this year. And they've had a big decrease in outbound volume. So you see that big dip there in the bottom right-hand corner, that chart. That dip is the 4th of July. And then we've started to kind of come off of that post 4th of July pop. We've started to slip here out of Atlanta. That's the blue line. The orange line is the volume going into Atlanta. So as those two lines get closer and closer, capacity starts to get a lot looser out of Atlanta, meaning if you're moving freight out of Atlanta, you should have a lot more opportunities for carriers to choose from. And we may start to see tender rejections slip out of Atlanta if these two lines continue to hold there right now. That'll do it for today's broker update.
Hello and welcome to the DHL Supply Chain Pricing Power Index update. I'm here with the one and only Andrew Cox. Andrew, what do you have for us today?
Tony, the carriers are in a mighty fine position right now. They gained another 10 points in the index this week. They're now sitting at the highest point that they've been in the series history. We started doing this back in September, and 75 is the highest number the carriers have gotten to.
Got you. And Andrew, what are some of the factors right now that's really pushing this up?
Well, the biggest reason really is just the options that the carriers have, and those come from the volumes. With both Luke and both the two men in front of me spoke to this. You know, we had a very good week last week. They've surged even higher from them, almost 4% up week over week. The year-over-year comparison is just absurd, almost 30% up year-over-year. These volumes just continue to gush from all over the country, and that's just giving carriers a lot of options, and they are using those options and exercising them, which we'll see here when we talk about tender rejections in a moment.
So it sounds like it's a good problem for these carriers to have. Optionality is the name of the game for them. So what is this doing for some of the rates?
Yeah, the rates are pushing up, and the reason for that here is when we look at tender rejections. I've got the 3-year comp here. The blue line is 2020, purple 2019, and green was that banner year in 2018. Again, we're just holding at a really high level, this elevated level. I mean, between 16 and 17 is historically an extremely high level of tender rejections, and it's staying there. This is typically a seasonal adjustment where we see spot rates come down. You can see in 2018 and 2019 as well. They both kind of drew back in the month of July, but we're not seeing that normal seasonality. And that really has translated into higher rates. You can see this blue line. Again, we got the 3-year stack, 2020 in the middle, 2019 on the bottom, and the good year 2018 there. But you see the rates off the bottom in May just continuing to climb, now at $1.82 a mile. Really strong rates excluding fuel.
Right, and Andrew, one of the things that I can remember last time, even though this is an all-time high, last time that we even came close to this, I believe, was early in March when, of course, there was that run-up when the coronavirus pandemic first initially launched off. Do you see this as a potential second run-up during the second wave?
Yeah, I mean, there is something that I do see as a potential headwind that I'm starting to see in the market, and that's when we look at, these are the truck stop van spot rate volumes. You see a lot of red. For the last few weeks, I've just seen nothing but green here. This could be the beginning of a slowdown, of a cresting in volumes. I think that's what we might be seeing here. So yeah, I think most certainly, I mean, 13,000 on the volume, that is not sustainable. We can't do that forever. The question is just how long can it last? And I think we may finally be seeing some of those signs of it starting to cool off.
Excellent. A lot of amazing insight. Andrew, where can people find more?
You can go to freightwaves.com/passport for all of our latest. Kevin Hill and I will be back for Great Quarter Guys on Tuesday. That's our podcast at 2 p.m. Every Tuesday afternoon.
Excellent. We're looking forward to it. Thanks so much. And thank you so much for tuning in. That's going to do it for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. Thanks so much for tuning in. That's going to wrap it up for this Friday edition of FreightWaves Now. But as always, the content doesn't stop here. You can check us out around the clock. Our media team is the hardest working in the industry, so check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you next week.